The American automobile, for so long the symbol of America's wealth and extravagance, is dying. New cars and used cars stand like shiny tombstones in the showrooms and parking lots of the nation's car dealers, unloved, unwanted and unsold. People can no longer afford to run cars that do 12 miles per gallon. Petrol stations can no longer afford to fill up cars whose tanks take 20 gallons. The monsters are dying of thirst. The energy crisis is killing them. So said the introduction of a somewhat apocalyptic 1973 Thames television documentary on the impact of the OPEC oil embargo on the United States. The Arab Oil Embargo of 1973 changed forever both the structure of oil markets and perceptions of what over the years had been referred to as the American dream of unfettered economic growth and expansion. The seeds of the oil embargo were planted in August 1973 in preparation for what would become known as the Yom Kippur War. Saudi King Faisal and Egyptian President Anwar Sadat met in Riyadh and secretly negotiated an accord whereby the Arab states would use the oil weapon as part of the upcoming war with Israel. The Yom Kippur War begins on October 6, 1973, with Arab forces launching a surprise attack against Israel. The opening phase of the conflict proved devastating to Israel as they were caught completely wrong-footed. The Israeli military had been convinced that following their devastating defeat in the Six-Day War of 1967, that their Arab neighbours had no stomach for war. There's an interesting point here to note, and that is that Israeli intelligence had convinced itself it was operating within its own echo chamber. So it was repeating its own narrative to itself over and over again. It could not in any way conceive of the fact that their view of the world was wrong. And this is one of the subtexts of this video. It is this inability to form a variant perception, an idea that the way you see the world is not the way that everybody else sees the world. And following on from that, what are you going to do when your worldview clashes with the true worldview? As the war was in full swing, Arab oil-producing states raised oil prices by 17% to $3.65 a barrel, and they immediately announced production cuts. 2 days later, on October 19th, Richard Nixon requested that Congress authorise $2.2 billion in emergency aid to Israel, which triggers a collective Arab response. Libya immediately proclaimed a complete embargo, and the other Arab oil-producing states followed the next day. The flow of oil from Arab states into the US abruptly ends. The impact of this needs to be viewed in context of the time. Post-World War II, the American economy had enjoyed a boom of staggering proportions. Americans were affluent and highly mobile, and this mobility was granted by the car. Air travel was not at the level that it is today. It was simply not the default mechanism of travel as we would expect. Some 30% of all oil into the United States was consumed by cars. And in the years since the Second World War, the US had moved from being self-sufficient in oil to being a net importer. At the height of the embargo, the US was short some 80 million barrels of oil per day for domestic consumption. This prodigious consumption is not surprising when viewed within the context of petrol at 30 cents a gallon, not 30 cents a litre, 30 cents a gallon. Cars that regularly did between 6 and 12 miles per gallon, and a population that was used to the mobility offered by cars. The oil embargo of 1973 did not actually come out of the blue. And this is also one of the themes of this video. There are always clues, but as always with humans, we are wedded to both our own narrative and a sense that the world will never change from the one we have experienced. I've spoken at length about recency bias, the simple notion that someone's worldview is that tomorrow will be like today because today was like yesterday and nothing will ever change. As a current example, we have a generation of traders who've been brought up with the belief system that markets never go down. But when markets do go down, they're caught completely wrong-footed, both in terms of the technical aspects of their trading, but more important in terms of their psychological and emotional well-being. They simply do not know how to respond because the world is at variance with their experience, but also, more importantly, at variance with their, let's call it religious view, that the market never goes down. And this creates a great deal of tension. With this notion of oil shocks, there had actually been a series of shocks going back to 1967, and they didn't truly end until 1979. And their appearance can be traced back to a series of historical and economic factors that were in operation at the time. Post the disastrous 1956 Suez Crisis, which was a terrible misadventure by England and France in concert with Israel, and an attempt to impose some form of redundant colonial order back on the Middle East. The Seven Sisters oil companies, which have been listed here, had been vastly profitable, and they had been vastly profitable because of the monopoly on oil exports that colonialism gave them. Now, I said that part of the theme of this video is the notion of warnings, and that very rarely do we have surprise events that blindside markets. Geopolitical events take some time to wind up. Granted, their impact can be unpredictable, but they do not happen overnight. As I record this, the current Russian invasion of Ukraine is a powerful example. But there is a false logic when we look back at historical events that we need to be aware of. We tend to assume that because the events and the unfolding of events is obvious to us, that it was obvious to people at the time. We have this tendency to collect a series of events, put them together in a timeline, draw a straight line through them, and then assume that everything was obvious to everybody at the time. This form of hindsight bias is something that both historians and traders alike are very, very guilty of. The oil shock of 73 is not immune to this sort of assuming that something that is obvious to us was obvious to everybody at the time. Post hoc analysis makes everything seem obvious. However, the oil crisis does have a definitive timeline that does make what was to come regarding the price of oil somewhat obvious. It should be noted that as the oil crisis unfolded, the 73-74 stock market crash was already underway. The oil embargo did not trigger the stock market crash. What the oil embargo did was cripple any sense of recovery because the market had had a small recovery. But as it was trying to recover, this embargo hit and hit with full force. But the issue here is simple. Traders would have been blind not to anticipate the impact of crippling the US economy would have on the market. It was obvious that the market had attempted to recover, and on the day that the embargo began, the market fell away from that recovery and collapsed, and went on to lose almost half its value. That is an obvious thing. What is intriguing when looking back at the oil crisis of 73 is that some parts of US society were awake and aware of the danger that this sort of embargo posed. It is interesting that the US oil industry did appear to be aware of the possibility of the embargo and petitioned Nixon not to support Israel in the conflict. They had obviously thought through what would happen if the tap was turned off. And Nixon was caught between a rock and a hard place, as Israel was pushing for support in a war of attrition that was wearing them down. His own oil industry and oil lobby were pushing him not to offer support. And all of this was occurring against the backdrop of the unfolding Watergate crisis. Some 3 weeks after beginning, the Yom Kippur comes to an end with a staggering Israeli victory. Arab armies, which at one stage were threatening the very existence of the State of Israel, had been pushed back to within sight of their own capital. However, the ending of the war did not bring about an ending of the embargo. The embargo continued to unfold. In November, Arab producers announced a further 25% cut, and a further 5% cut in production was threatened. In December, Arab oil ministers agreed to another 5% cut for non-friendly nations to take effect in January 1974. But on Christmas Day, 1973, Arab oil ministers cancelled the January output cut, and a rise in OPEC production was even promised. The embargo officially ended on March 17, following a series of frantic negotiations to pull Israeli forces back from the Suez. But there is something I've left out of the timeline, and it is something that, even without the value of hindsight, is blindingly obvious. On August 30, King Faisal of Saudi appeared on the NBC network, and he very interestingly pointed out that America could have oil, or it could support Israel. It could not have both. So simply disregarding the timeline and all the previous sort of geopolitical events and listening to this gives you a clue as to what would happen. You would be foolish not to have taken that on board. The Yom Kippur War was merely a trigger for what was already agreed upon. This strategy was going to come into play at some point in time. But again, we're caught in this notion that the way I see the world today is the way I saw the world yesterday, and it's the way the world will be tomorrow. It will not be any different. And there's an intriguing little snippet in this picture that's on the screen at present. Look at the cars. All bar one is a giant American gas-guzzling piece of shit. There is a little Honda Civic in there. That is the taste of what is to come. But it's also representative of the fact that people could not conceive of a different world. People could not see that the world was going to change, and change completely. The point here is that people were wedded to the narrative of cheap petrol and the associated notion of American exceptionalism. And even when you get a direct statement from someone involved, it did not penetrate this sense of exceptionalism. It did not penetrate this worldview. And when going back and reviewing the history of the oil embargo, one of the things that was intriguing is the notion of the number of times I read the statement, they could not believe that this could happen in America. Now, traders act with the same sense of disbelief when something outside their chosen narrative blindsides them. At present, social media is alight with traders who cannot accept that at present gold and oil are going up, equity markets are going down, and that when things reverse, they will have trouble accepting the reverse. Such traders have obviously never engaged in the thought process of what I've referred to as being variant perception, which is simply asking the question, What happens if the rest of the world doesn't see the world the way I do? All of this does raise the technical trading question as to what the trajectory of the price of oil was at the time. And as you can see, the price of oil was for decades stable in a very, very narrow range. This stability was a function of both the oligarchy of Western oil economies, reasonably slow domestic take-up of oil as a fuel supply, and no real external shock in the years from sort of 1920, 1930 through to the 1970s. Now, if we're looking at this as traders, we would consider this to be a range-bound market. This is a congesting market. It should be remembered, though, that there is an historical context to this. Oil futures did not come into existence until 1983. So this is effectively a fixed price market. This is a market where someone externally sets the price. However, given the events of 1973, traders should not really have been surprised to see the price explosion that occurred through to the 1970s. We all know that the longer a market goes sideways, the more explosive the move when it is finally released from this constriction. This is not a new thing. This is not some magic new technical thing that occurred. The longer price grinds itself sideways, the more explosive the move when released. That's an obvious old maxim that we've had in markets for probably as long as we've had markets. So there was no reason not to accept the possibility of higher prices. And we need to come back to the age-old statement. Remember that markets can move further than you could ever imagine. And they can do so with ferocity that you could never imagine. And we're seeing this unfold at present. It's also worth looking at the history of what was occurring with markets at that time. This is a chart of the Dow Jones, and it encapsulates a 73-74 bear market. I've dropped a blue line down the chart. That blue line indicates the date on which the oil embargo began. You can see the market had attempted to recover. The embargo begins, market collapses. You would have to be remarkably insensitive to what was occurring in markets to not understand that switching off the American economy, turning the lights off completely, would not have devastated the market. It is and was even then an obvious thing. But what is interesting is the long-term impact of the embargo. It took the market 10 years to recover. Yes, the market traded within a range, but it still took it 10 years to recover. It was not until the unfolding of the earlier part of the 1980s bull market and the appearance of Reagan that markets began to recover. This raises another technical point. Markets can go sideways for much longer than you could ever envisage. But this brings me to the take-home points. History for traders is a rich source of background material. Most amateurs, though, choose to ignore it. They're more attuned to what they want to get from social media. They're more locked into their own echo chamber. And this is why they remain amateurs forever. History in markets repeats itself. It has to repeat itself because human behaviour as a population, as a group, never changes. There is nothing new, and markets respond to geopolitical shocks with an overreaction. And it does remain to be seen how much of this overreaction the current conflict in Ukraine will generate. Listening and watching is a skill that few traders possess. Most people think they are listening. Most people think they are dispassionate observers of the truth. But in actual fact, what they are doing is listening to things that confirm their current beliefs. They want to be told that what they think right now is correct. This is why people will not take on variant points of view, because it clashes with what they assume to be true in the world. Sometimes history is actually linear, and it does actually point in only one direction. When this does happen, and if your opinion is different to what the rest of the world thinks, then you are actually in trouble. Disruption provides opportunity and a catalyst for change. The various oil shocks brought about not only a change in the structure of the world, but also in the structure of markets. The introduction of oil futures was not long after the last oil shock of 1973, and since then they've been an enormously fertile ground for traders. More importantly, and as a final point, disruption provides an opportunity for profit for those who are willing to take the risk. There is always a risk in change. This is simply the way it is. But if you are willing to manage that risk and to take that risk, there is the opportunity to profit.